Hi everyone, Brian Whitmer here. I wanted to take a minute right now to highlight something that I find interesting about wave analysis and something that I also think is kind of unique to wave analysis. I want to take a look at a forecast we made about a year and a half ago. This was a forecast in the Swiss market index that we published back in July of 2017, and I want to show you what we were looking at back then and how we arrived at what turned out to be a very accurate forecast. So back then I was essentially looking at these two charts. And the obvious thing that stood out to me was this wave structure right here. This is a 5-wave advance, but it's an incomplete 5-wave advance. And so what I did was kind of blew up this chart. The chart on the right is a zoomed in version of the chart on the left. And I'm looking at this 5-wave advance. And all I really said to myself was a couple things needed to happen. This last leg of the advance here needed to poke above this wave 3 high. It needed to make a new high in order to label wave 5 complete. And we needed to see a minor degree 5-wave advance within that rally. So that's essentially what we said in the letter. This is really a direct quote. I said the minimum requirement for the advance is to trace out 5 minor degree waves and to exceed the August 2015 high, that was 95.38. I said the SMI will need to push about 6% higher in order to satisfy this condition. So if you bear with me a second, we should talk about the things that were not a part of that forecast. For one thing, what's not in that forecast is any fundamental research, right? I didn't look at the fundamentals on the SMI. I didn't look at the fundamentals on any of the companies that comprise the index. No earnings, no profits, no PE ratios, no balance sheets. In all honesty, I did not research any of that. I also did not look at any technical studies. No momentum, no relative strength, no stochastics. I didn't make any complex calculations at all, really. And finally, I didn't look at any probable actions by the Swiss National Bank or the European Central Bank. I didn't really care if they were going to raise rates, lower rates, buy bonds, sell bonds. None of that really mattered to the forecast. What did matter, of course, was the wave structure, and that's what I looked at. The pattern was a nearly complete advance at multiple degrees of trend, and that was really the only thing that prompted the forecast. So I just want to quickly update, here's the reversal so far. The SMI did hit 96.16 right at that high. That was January 24 of 2018. That was 6.6% above the July 2017 level. Prices did surpass that wave 3 high by about 70 points, and the index immediately reversed. These are the waves of selling here on the right. We had a wave 1 down. We had a wave 2 up. I'm not sure if that's complete yet. Prices have come back above to about that level since I updated this chart. But either way, I don't believe that this decline is anywhere near complete. So the broader point here is that a lot of times, newcomers to the wave analysis, they're surprised when they can make highly accurate forecasts just using the wave structure. Again, no technicals, no fundamentals, none of your favorite indicators, just the wave structure itself. And I think that's a valuable aspect of our model, and I think it's a unique one too. I don't know of any other method where this kind of simplicity is kind of baked into the model. So anyway, that's just a little thought experiment I wanted to share with you. I wish everyone successful trading in the new year.